Hello friends, in the series on income tax cases today we will discuss a very important case which is in relation to the deduction under section 80 IC. Although it is not a very hot topic for the discussion, but the purpose of discussing this case is just to demonstrate that how the assessments are done in the income tax proceedings by the assessing officer, just by keeping in mind that whatever the assessee is saying that is not correct, and from the very inception whatever the assessee takes the stance, the revenue tries to take a different stand whether that stand is justified or not. In the present case, the issue before the Honorable Gujarat High Court was that if the assessee is claiming some deduction under section 80 IC, and in that deduction the assessee claims that the assessee has earned some fluctuation gain for the items imported by the assessee has claimed some excise duty refund, and if the assessee has sold some scrap of the manufacturing process, so whether these items will be connected with the 80 IC deduction or have direct relation with the manufacturing activity of the assessee. This issue has been taken up by the court in the case of Principal Commissioner of Income Tax versus Racket Bank Cancer Healthcare India Private Limited. Healthcare India Limited. This case is reported in 451 ITR at page number 403. In the present case, the assessment year related is assessment year 2009-10, and during the assessment proceedings, the assessee has claimed that the assessee is eligible for section 80 IC deduction. When the assessment proceedings were going on, the learned assessing officer noticed that the assessee has included three amounts in calculating the 80 IC deduction. The first amount was that the assessee has imported some goods, and when the assessee was making the payment for the import of goods, the assessee earned some exchange gain. The second, the assessee has got some excise duty refund, and third, the assessee has received some amount from the sale of scrap which was directly related with the manufacturing activity, and the assessee has included all these three items in calculating the 80 IC deduction. It was the contention of the learned assessing officer that these three items do not have any immediate and direct relationship with the business activity of the assessee, and they do not have the first degree nexus with the business profits of the assessee, so the assessee is not eligible for 80 IC deduction. So accordingly he disallowed the deduction under section 80 IC for the three items. When the matter was before the CIT appeal said that all the three items do have immediate and direct nexus with the manufacturing activity of the assessee. They do have the first degree nexus with the business profits of the assessee, and hence in no stretch of imagination it can be said that the assessee is not eligible for the deduction of all these three items. The revenue filed the appeal before the tribunal, and the tribunal also upheld the order of the CIT appeal. When the matter came before the Gujarat High Court, the court said that in the present case, the revenue has not brought any evidence to demonstrate that these three items do not have any nexus with the direct business and manufacturing activity of the assessee. The court said that in the present case, the assessee was importing the material from the other countries for which the assessee has to make the payments, and if in the course of making the payments the assessee earns some exchange gain, then it is obvious a business profit of the assessee. Similarly, the excise is paid on the manufacturing activity, and if the assessee gets some refund, then it is directly related with the business activity of the assessee. And similarly, if the scrap is generated from the manufacturing activity, then there is no doubt that it is the byproduct of the manufacturing activity. So all the three items do have the direct nexus with the manufacturing activity and eligible for section 80 IC deduction. Friends, the purpose of discussing this case is that whenever the assessee says that this is my house property income, the revenue says that it is a business income, or vice versa. When the assessee says that it is my capital gain, the revenue says that it is a business income, or vice versa. Without going into the integrity of the matter and without examining whether in the previous years the same has been allowed to the assessee or not, So the revenue is not following the principle of consistency in the most of the cases. At the end of this video, once again I am repeating the name of the case. The name of the case is Principal Commissioner of Income Tax versus Racket Beckinson Healthcare India Limited, and this case is reported in 451 ITR Act page number 403, and the matter has been decided by Honorable Gujarat High Court on 3rd January 2023. Thank you, friends.